When was the last time you checked the balance of your savings account? If you haven't looked for a while, your bank may not have your back if there's fraud on your account. This is a lesson one Calumet Heights woman learned the hard way, unfortunately.
A police sergeant walked into his Chase Bank branch to check on his savings. The teller said everything looked fine. Balance, $87,000. 2 hours later, a stranger walked into a different Chase branch across town and withdrew all of it, in cash, without his permission, without his ID, without him even knowing. This isn't a hack. This isn't identity theft. This is something far more disturbing. Today, I'm exposing how criminals are walking into bank branches and withdrawing money from accounts they don't own, why banks are refusing to refund victims, and what you need to know right now to protect every dollar you have deposited. Let's get into it. The withdrawal that shouldn't have happened. Sergeant Michael Torres spent 23 years with the Los Angeles Police Department. He had seen every scam, every con, every fraud tactic criminals use. He thought he knew how to protect himself. On a Wednesday morning in February of 2025, Michael visited his local Chase Bank branch in Burbank to verify his account balance before making a down payment on his retirement home. He had been saving for years, $87,341 accumulated through disciplined budgeting and overtime shifts. The teller confirmed his balance. Everything looked good. Michael left the bank planning to return the next day to withdraw funds for his down payment. That afternoon at 3:15 in the afternoon, a man walked into a Chase Bank branch 17 miles away in North Hollywood. He presented an ID with Michael's name, but a different photo. He had Michael's account number, social security number, and mother's maiden name. He requested a withdrawal of $87,000 in cash. The teller asked a few verification questions: mother's maiden name, date of birth, address. The man answered correctly using information obtained from data breaches. The teller processed the withdrawal, $87,000 in cash, handed over in bundled hundreds. No phone call to Michael to verify. No flag on the account for unusual activity. No secondary verification required for a massive cash withdrawal, just a teller following what they believed was standard procedure. Michael discovered the theft the next morning when he returned to make his planned withdrawal. His account showed a balance of $341. He was told someone had withdrawn $87,000 in cash the previous day at a different branch. "That's impossible," Michael said. "I was working yesterday. I never went to that branch. Someone stole my money." The branch manager pulled up security footage from the North Hollywood location. Michael watched a stranger walk out with his entire life savings in a duffel bag. A stranger the teller had handed $87,000 in cash to without proper verification. Chase Bank's initial response: "The withdrawal was processed according to our procedures. The individual presented identification and answered security questions correctly. We cannot be held liable for sophisticated fraud." Michael, a police sergeant who had dedicated his life to protecting others, had just lost everything because a bank teller failed to verify the person making a massive cash withdrawal was actually the account holder. And here's what's going to make your blood boil. This isn't isolated.
So someone drained thousands of dollars from a local family's bank account while they were on vacation.
It's happening at Chase, at Bank of America, at Wells Fargo, at credit unions nationwide. Criminals are walking into branches with fake IDs and stolen information, and tellers are handing them cash from accounts they don't own. And when victims fight back, banks are hiding behind policies that blame everyone except the employee who gave away the money. But how exactly are these criminals pulling this off so smoothly, right in front of trained bank employees? The answer is far more calculated and terrifying than you'd expect. How criminals execute in-branch fraud.
Forcing victims to use the tap feature, then draining their accounts. And it happened to several Chase Bank customers in San Francisco.
It did, but the bank denied their claims. So one victim set out to prove to the bank that he really was scammed. 7 on your side's Michael Finney has his story. Michael.
According to the American Bankers Association, in-person bank fraud schemes have evolved significantly as criminals recognize that human tellers are often easier to exploit than digital security systems. The operation begins with information gathering. Criminals acquire comprehensive personal data from data breach databases: full name, social security number, date of birth, address, mother's maiden name, and often even recent transaction history. According to Identity Theft Resource Center data, over 3,200 data breaches occurred in 2023 alone, compromising more than 350 million records. Next comes fake identification creation. Using high-quality printers and materials readily available online, criminals produce driver's licenses or state IDs with the victim's real information but the criminal's photo. Some operations have access to ID-making equipment sophisticated enough to fool even trained bank employees. The targeting is deliberate. Criminals choose branches located far from where victims typically bank, reducing the chance that tellers will recognize something is wrong. They select branches in high-traffic areas where tellers are busy and less likely to scrutinize every detail. They time visits for shift changes or peak hours when employees are rushed. The approach is confident and rehearsed. The criminal walks in appearing calm and legitimate. They present the fake ID, provide the account number, and answer security questions using stolen information. They make small talk to seem normal. They act annoyed if questioned too extensively, using social pressure to discourage thorough verification. The withdrawal request is calculated. Most operations request amounts under $10,000 to avoid currency transaction reports required for larger withdrawals. But some, like in Michael's case, go for the entire balance if they're confident their fake ID and stolen information will pass verification. Sarah, a former Chase bank teller, explains the pressure employees face. We're taught to provide excellent customer service while also watching for fraud. But the fraud training focuses on forged checks and counterfeit bills, not on verifying that the person standing in front of you actually owns the account. If someone has an ID matching the account name and answers security questions correctly, we're trained to process the transaction. What Sarah describes is the core vulnerability. Banks rely on information that's already been stolen. Security questions based on data breached years ago. Signatures that can be practiced and forged. Photo IDs that can be faked. The security measures designed to protect customers have become security theater that criminals easily bypass. Jennifer lost $43,000 when someone walked into her Wells Fargo branch with a fake ID and withdrew her savings. The teller never called her to verify. "My phone number was on the account," Jennifer said. "It would have taken 30 seconds to call and ask if I was making a large withdrawal. They didn't bother, they just handed my money to a stranger." And here's the part that should terrify you. These criminals aren't master forgers with Hollywood-level fake IDs. They're using IDs that wouldn't pass close inspection by a motivated employee. But tellers are trained for speed and customer service, not for forensic ID verification. And that training gap is costing customers everything. So now you're wondering, when victims discover this nightmare, surely the bank steps in and makes them whole, right? What happens next will leave you absolutely stunned. Why banks refuse to refund victims. When Michael Torres filed a fraud claim with Chase Bank, he assumed the bank would immediately refund his money. He had done nothing wrong. He hadn't shared his information. A bank employee had given his cash to a criminal. Surely the bank was liable. Chase denied his claim. Their reasoning: the withdrawal was processed following our standard verification procedures. The individual presented identification matching the account holder's name and provided correct answers to security questions. Our employee acted in accordance with bank policies. Chase Bank is not liable for losses resulting from identity theft when proper procedures were followed. This response reveals the legal framework banks hide behind when in-branch fraud occurs. According to banking law experts, the Uniform Commercial Code and various state regulations create complex liability questions when fraud involves properly executed transactions. Hear what a reporter have to say about this.
When was the last time you checked the balance of your savings account? If you haven't looked for a while, your bank may not have your back if there's fraud on your account. This is a lesson one Calumet Heights woman learned the hard way, unfortunately.
Banks argue that if their employee followed established procedures, the bank fulfilled its duty of care. The fact that the procedures were inadequate to detect sophisticated fraud doesn't make the bank liable. It makes the victim liable for having their identity stolen. The Electronic Fund Transfer Act, which protects consumers from unauthorized electronic transfers, has limited application to in-person branch transactions. Courts have inconsistently applied consumer protections, with some ruling in favor of banks when employees followed procedures, even if those procedures were insufficient. Furthermore, account agreements customers sign when opening accounts often include liability waivers stating the bank is not responsible for losses resulting from identity theft if the bank's employees acted in good faith following standard procedures. David Rodriguez lost $56,000 when someone withdrew his savings from a Bank of America branch using a fake ID. Bank of America denied his fraud claim 3 times. Their position: our employee verified identification and security information according to our protocols. The loss resulted from identity theft, not from bank negligence. We cannot be held responsible for sophisticated fraud that circumvents standard verification measures. David hired an attorney and sued Bank of America. The lawsuit was dismissed. The court ruled that Bank of America's verification procedures met industry standards, and the bank could not be held liable for identity theft losses when employees followed those standards. David never recovered his $56,000. He depleted an additional $18,000 in legal fees fighting a battle he couldn't win. The court's message was clear: if banks follow their own policies, they're not liable, even when those policies are inadequate to prevent fraud. Michael Torres, the police sergeant, fought Chase Bank for 18 months. Chase eventually settled and returned $52,000 of his stolen $87,000, but only after Michael retained an attorney, filed complaints with regulatory agencies, and threatened a lawsuit. Chase admitted no wrongdoing and required Michael to sign a non-disclosure agreement as a condition of the partial settlement. Michael lost $35,000 permanently. That's the $35,000 Chase refused to refund, plus his legal expenses. And here's the cruelest irony. The teller who handed cash to the criminal faced no meaningful consequences. No termination, no discipline noted in their employee record. Just additional training on ID verification procedures that will likely be ignored the next time a confident criminal with a fake ID shows up during a busy shift. If you're realizing that your bank's security procedures are designed to protect the bank, not you, hit that like button and subscribe right now. What I'm about to show you, the specific red flags tellers are missing, and why your money isn't safe even in a bank vault, is going to change how you think about where you keep your savings. Drop a comment. Do you keep large amounts in checking or savings accounts? Your answer could determine whether you're the next target. But here's what nobody is talking about. There are very specific warning signs present in almost every single one of these cases, signs that trained tellers look right past. Are they hiding in plain sight at your own bank? Read on. The red flags tellers are missing. Banking security experts who have reviewed cases of in-branch fraud have identified consistent patterns that tellers fail to notice or fail to act on.
Caught in the act, investigators say this woman repeatedly tried to get money out of a bank with a stolen identity. This all began with stolen mail and a run to at least 4 different local banks. Channel 11's Andrew Hebranek explains how quick thinking by a bank teller helped police crack this case.
First is the geographic anomaly. When someone withdraws money from a branch far from where the account was opened or where transactions typically occur, that should trigger verification. In Michael Torres' case, the criminal withdrew funds from a branch 17 miles from where Michael normally banked. The teller never questioned why an account holder would travel across town to withdraw their entire balance instead of using their regular branch. Second is the withdrawal pattern deviation. Michael had never made a cash withdrawal over $2,000 in the 23 years he had banked with Chase. Suddenly, someone shows up requesting $87,000 in cash. This massive deviation from normal account activity should have triggered secondary verification. It didn't. Third is the photo discrepancy. While the fake ID had Michael's information, the photo was of a different person. Different age, different ethnicity, different build. Tellers are trained to check photos, but in practice, they often glance at the ID briefly and move on if the name matches. Fourth is the nervousness indicators. Security training teaches tellers to watch for nervous behavior. Excessive sweating, avoiding eye contact, rushed speech, irritability when questioned. But criminals who have practiced their approach appear calm and confident, while legitimate customers who are nervous about making large withdrawals might exhibit suspicious behaviors. Fifth is the new account holder claim. Some criminals claim to have just inherited the account, just moved to the area, or just updated their ID after a name change. These stories explain discrepancies but should trigger heightened verification. Tellers often accept these explanations without confirming them. Sixth is the cash-only insistence. Requesting large amounts in cash rather than cashier's checks or wire transfers is unusual and should raise concerns. Cash is untraceable. Legitimate customers making large withdrawals for homes, cars, or investments typically use traceable payment methods. Lisa, a bank security consultant, reviewed over 200 cases of in-branch fraud. Her findings: in 93% of cases, there were at least 3 red flags present that the teller either didn't notice or didn't act on. The training exists, but the emphasis on customer service and transaction speed overrides security concerns. Tellers are discouraged from being too suspicious because it creates friction with legitimate customers. Jennifer Martinez's case is illustrative. The criminal who withdrew her $43,000 was a different gender than Jennifer, traveled from a branch 40 miles from her usual location, requested the entire account balance in cash, and exhibited nervous behavior throughout the transaction. The teller later testified she noticed the person seemed anxious, but attributed it to normal nervousness about carrying large amounts of cash. 4 red flags, all ignored. $43,000 handed to a criminal. And when Jennifer's attorney questioned the teller during proceedings, the teller's answer was chilling. "I see dozens of customers every day. I can't scrutinize every transaction like it's a crime. If I question everyone, I get complaints about poor service. We're supposed to balance security and service, but honestly, service wins every time." That statement, "service wins every time," explains why criminals keep succeeding with in-branch fraud. Banks have optimized for customer convenience and transaction speed, creating an environment where thorough verification is seen as an obstacle rather than a necessity. Now, you might be thinking you're safe because you've kept your personal information private. What you're about to discover is a cold, uncomfortable truth that changes everything you thought you knew about your own security. The information that's already stolen. You might be thinking you're safe because you haven't shared your information. But here's the uncomfortable truth. The data criminals need to impersonate you at a bank branch has likely already been stolen. According to proven statistics, a breach notification service, over 12.5 billion accounts have been compromised across thousands of data breaches since 2007. The average person's information has been exposed in multiple breaches, often including social security numbers, dates of birth, addresses, phone numbers, and answers to common security questions. The Equifax breach of 2017, 147 million Americans had names, social security numbers, birth dates, addresses, and in some cases, driver's license numbers exposed. That's nearly half the United States population. The Marriott breach of 2018, 500 million guests had names, addresses, phone numbers, email addresses, passport numbers, and in some cases, payment card information stolen. The Capital One breach of 2019, 100 million Americans and 6 million Canadians had names, addresses, phone numbers, credit scores, payment history, and social security numbers compromised. These are just 3 examples from hundreds of major breaches. The information criminals need to answer your security questions, forge your ID, and impersonate you at a bank branch is available for purchase on dark web marketplaces for as little as $5 to $50, depending on how complete the data set is. Your mother's maiden name? Likely exposed in multiple breaches. Your date of birth? Almost certainly available. Your address? Definitely compromised. Your social security number? Probably stolen in at least one major breach. Marcus Williams discovered his information had been exposed in 11 separate data breaches when he used "Have I Been Pwned" after becoming a fraud victim. His name, social security number, date of birth, previous addresses, phone numbers, email addresses, and security question answers were all available on the dark web. "I thought I was careful," Marcus said. "I never clicked phishing links. I never shared information with sketchy websites. But it didn't matter. The companies holding my data got breached, and criminals bought my complete profile for probably less than $20. This reality means that traditional security measures, security questions, ID verification based on biographical data, confirmation of addresses, are fundamentally broken. The information they rely on is already compromised. Banks know this. Security experts have been warning about it for years. Yet banks continue using these methods because changing their verification systems would be expensive and operationally complex. So they leave the system broken, knowing it will cost some customers everything while the bank escapes liability through legal technicalities. If your data is already out there and the bank's procedures are failing, you're probably wondering whether all those security cameras and guards and reinforced windows are doing anything at all. The answer will make you rethink everything you see when you walk into a bank. The branch security theater. Walk into most bank branches, and you'll see security measures that create an illusion of protection. Cameras, security guards, reinforced teller windows, cash counting machines, ID scanners. But here's what those measures actually protect: the bank's cash from armed robbery. They do almost nothing to prevent someone from withdrawing your money using a fake ID and stolen information. The cameras record the criminal's face, which helps law enforcement after the fraud but doesn't prevent it. The security guard watches for weapons and hostile behavior, not for someone calmly conducting a fraudulent transaction. The reinforced windows protect employees from violence, not customers from identity theft. The ID scanners read information from licenses but don't verify that the person holding the ID is actually the person pictured. Banking security expert Robert Martinez calls it robbery-era security in an identity theft era. The security infrastructure was designed for an age when bank threats meant guns and masks. It's inadequate for modern threats involving data breaches and forged documents. Banks spend millions on physical security to prevent the theft of tens of thousands, Martinez explains, but they underinvest in identity verification that would prevent the theft of millions. The priorities are backwards because banks aren't liable for identity fraud the same way they're liable if their cash vault is robbed. The result is security theater that makes customers feel protected while leaving them completely vulnerable. Jennifer Park lost $67,000 from a Wells Fargo branch that had security cameras, a guard, and reinforced windows. None of it helped. The cameras recorded the criminal clearly, but they didn't prevent the teller from handing over Jennifer's money. The guard watched the transaction happen without intervening because nothing appeared violent or threatening. "I saw the security measures and assumed my money was safe," Jennifer said. "The cameras, the guard, the professional environment, it all suggested security. But those things weren't protecting me. They were protecting the bank's cash. My money could be stolen by someone with a fake ID and a smile." And that's the fundamental deception. Banks create an environment that feels secure while implementing policies that shift fraud liability to customers. It's brilliant from a business perspective and devastating from a consumer protection perspective. So if the banks won't protect you, and the courts won't help you, and your data is already compromised, what on earth can you actually do? There are specific, actionable steps you can take right now, and one of them may have already saved someone $34,000. How to actually protect yourself. Before I share the tips for your protection, you need to see this.
According to the Federal Trade Commission, bank account fraud is in the top 5 for identity theft scams this year. I reached out to Taylor Bird, Advia Credit Union Manager of Marketing. She says what happened.
Given that banks won't protect you adequately and legal recourse is limited, protection requires personal action that limits your vulnerability. First, never keep large amounts in easily accessible accounts. If you have $50,000 or more in savings, don't keep it in a standard savings account at a branch where someone can withdraw it with a fake ID. Use certificates of deposit, money market accounts with withdrawal restrictions, or investment accounts that require additional verification for large withdrawals. Second, set withdrawal limits on your accounts. Many banks allow you to set daily limits on how much can be withdrawn via teller transactions. Set these limits as low as possible while still allowing for your legitimate needs. A $1,000 daily limit prevents someone from emptying your account in one visit. Third, require dual authorization for large transactions. Some banks offer services where any withdrawal over a certain amount requires verification from 2 authorized account holders or requires in-person verification with specific branch managers. These add friction but provide significant protection. Fourth, enable immediate transaction alerts for all account activity. Every withdrawal, every transfer, every check cleared should trigger a notification to your phone. If someone withdraws money from your account, you'll know within minutes instead of discovering it days later. Fifth, use banks that have implemented enhanced verification for in-person transactions. Some institutions now require photo verification where tellers must photograph the customer and match it to the photo on file, require video call verification for large withdrawals, or use biometric verification like fingerprints for certain transactions. Sixth, monitor your accounts daily. Check your balance every single day. Review transactions every single day. The faster you detect unauthorized activity, the better your chance of recovering funds before they're laundered and disappeared. Seventh, freeze your credit with all 3 bureaus. This won't prevent in-branch fraud directly, but it prevents criminals from using stolen information to open new accounts in your name at other institutions. Eighth, respond to data breach notifications immediately. If you're notified that your information was compromised, change your banking security questions immediately, update passwords, and consider closing accounts and opening new ones with fresh account numbers that haven't been breached. Ninth, never use real biographical information for security questions. Your mother's maiden name should not be her actual maiden name. Make it a random phrase you store in a password manager. Security questions should function like secondary passwords, not like trivia questions about your life. 10th, if you discover unauthorized activity, act within minutes, not hours. Call your bank's fraud department using the number on your card. File a police report immediately. Contact your state's banking regulator. Document everything. Time is critical. Sarah implemented these protections after learning about in-branch fraud. When a criminal attempted to withdraw funds from her account using a fake ID, the attempt was blocked by her $500 daily withdrawal limit. The criminal left the branch with only $500 instead of her full $34,000 balance. Sarah received an immediate alert about the $500 withdrawal, called her bank within 10 minutes, and froze her account before the criminal could return the next day for more. Her withdrawal limit and immediate alerts prevented a catastrophic loss, but she only had those protections in place because she had learned about this vulnerability before it hit her. If this video opened your eyes to how vulnerable your money is even when it's deposited in a bank, share it with everyone you know. Subscribe and hit that notification bell so you never miss alerts about threats to your financial security. These fraud methods evolve constantly, and staying informed is your only reliable defense. Stay vigilant out there. I'll see you in the next one.